Good morning, everyone, and thank you very much for joining. This is the morning market review. It's Thursday, it's the 24th of November. My name is Russell Shum, Senior Market Specialist at FXCM. My email address is r@fxcm.com. Just want to double check, can you guys see the screen and can you hear me loud and clear? Okay, brilliant. Hey, Zanetta. Morning, Howard. Nice to have you on the webinar. Thanks, everyone, for joining. All right, so I'm going to just start off with the just the high risk investment warning. I'll keep this on screen for a few moments. And here's our market commentaries disclaimer. Okay, and our references are MarketScope, TradingView, Bloomberg, and Forex Factory. I'm just going to bring up the. Actually, I haven't got Forex Factory up just yet. I'm going to bring that up. So yesterday we saw the University of Michigan numbers were due out yesterday. Of course, I forgot it's the Thanksgiving long weekend, isn't it, in the US? So that's why the University of Michigan was earlier this week. So you can see here's first day, and then if we take a look at tomorrow, it's not officially a public holiday, but generally guys in the US would certainly take 2 days here. So just worth keeping that in mind. So liquidity is probably going to be much lighter today and tomorrow. All right, let's go through the Bloomberg. So the first headline reads, Fed slowdown. Most federal officials believe the central bank should slow the pace of interest rate hikes. And that was from minutes from its latest gathering earlier this month. The minutes released yesterday support expectations that the Fed will raise by 50 basis points in December, ending a run of jumbo 75 basis points. Stocks rallied and the dollar fell. So that's what we're looking for. That's what we're looking at on this screen. It's sort of on my right. We've got the 2-year yield. This is the daily. We've got the real rates, and we've got 3 days of red on both. Take a look at the US dollars coming down. Take a look at NASDAQ now starting to move up. So yesterday we were suggesting that perhaps we should start looking to see if bottoms are going to start being locked in. We still want to keep an eye on the COPOC, which hasn't turned up yet. The COPOC still needs to turn up, but of course, as soon as that 2-year yield starts coming down, and if we just take a look at it on a weekly basis, I think that there's going to be a whole lot of shopping done by portfolio managers. So you want to just keep an eye on this 2-year yield. The next headline reads iPhone drama. Foxconn has begun offering staff $10,001, roughly $1,400 to any workers who choose to leave. An unusual decision intended to appease disgruntled new hires who played a central role in violent protests that rocked the world's largest iPhone factory. Apple's main global production partner said in an online notice. There's some to be paid out in 2 installments. So that's just a bizarre headline. Oil held a drop as the European Union considered higher than expected price cap on Russian crude. West Texas Intermediate traded near $78 a barrel. That's losing 4% Wednesday. Just the last headline, and then we'll get into some analysis here. Bill Ackman is shorting the Hong Kong dollar. The founder of hedge fund Pershing Square is betting against the currency's peg, with the greenback Pershing owns a large notional position in Hong Kong dollar put options. He said in a tweet, the peg no longer makes sense for Hong Kong, and it's only a matter of time before it breaks. All right, so let's take a look at what's happening on the. Let me just close it off. Let's take a look at the rate charts. I want to go back to the daily here, or just before we go to the daily, I think it makes sense perhaps to do a top down. So we'll we'll take a look at the weekly, go down to the daily. Just taking a look at Howard's question here. So Howard, the question's obviously, it's on cryptos. I'm not going to talk about it here just because there is a potential compliance issue, but you email me and I'll take a look at that. The question was, there was 2 opportunities to get out of the cryptos. Well, there was officially two breakdowns in the primary trend. That's what I showed. The market rallied after that. Yeah, but remember, we were looking yesterday at the primary trend. So looking at a long-term basis. Again, I think that's about as much as I want to say on it in this webinar, but just email me and we can discuss it further. The 2-year yield here, you can see, has pretty much run out of momentum. How do I see that? But it's moving sideways, and the candlesticks are incredibly short candlesticks. There's no volatility here. The real rate has also started showing signs of moderation. It's starting to pull down, and in fact, we've got some red there. And then the US dollar here is showing red. NASDAQ, which is very sensitive to interest rates, showing blue. So this is the environment that we are in. And if we go through to the daily chart, you can see that the daily shows 3 days of 2-year yields coming down, 3 days of real rates coming down, 3 days of dollar coming down, 3 days of NASDAQ pushing up. Of course, when I say 3 days, the 3rd day is today. So how we end today is going to be key to see if it maintains. But that's sort of the picture. In other words, it looks as if there is a risk-on type of sentiment that is prevalent in the market. And if that's the case, let's take a look at our charts. And the first chart I'm going to bring up here is the DAX, actually. And I want to just show you what we drew in yesterday. We drew in this line of support. So let me bring in an arrow here. So I had this resistance, 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 resistance. Then I was pegging this as support yesterday. It pushed below it, but not far below it. And now we're back above. So this level over here, I'm going to just extend it. This seems to be quite an important level in terms of the hourly chart. So this level over here seems to be a thick band of resistance support, but we're above it. So it seems to be a thick band of support. So that's interesting. And it's pushed up, and now we want to see if there's going to be some angle and separation that develops here. The cash market opens in about 7 minutes or so. Let's extend this as follows. So we've got, I think, this area to watch today. So if there is a dip, there's a dip in that DAX, just see if there is support that comes in. So this area here is something I think worth keeping an eye on. And the stochastic is showing some nice positive momentum. Let's go, so instead of doing a top down, let's do a bottom up. So we're going from hourly, let's go up to the daily. And you can see here that the daily is in zone 1. There is an issue here on the daily chart. What's the issue? The last number of candles here are not the most inspiring candles we've ever seen. So let's just understand that. So here is a very strong long blue candle, followed by another nice blue candle. But after that, we've got gravestone doji. Inside period, so let's call it gravestone doji. inside period. Is it inside period? Yeah, just a very short-bodied candle, short-bodied candle, short-bodied candle, short-bodied candle, short-bodied candle. So this area here, there just seems to be a lack of market excitement. That excitement there is not there at the moment, but there is a bullish momentum. There's a bullish momentum. The bullish momentum you can see from the stochastic, and you can see because we're in zone 3. I beg your pardon, because we're in zone 1. I beg your pardon. So there is bullishness on the daily chart, and then of course we've got this thick band of support, and we wanted to see if there's any pullback. Does the support level hold? And if that support level holds, that would be very interesting to see if we get the moving averages moving positively up, if the stochastic manages to maintain in this 80 area. If we go through to the weekly chart over here, this again to me is a very strong impulse move up. It's effectively closed the downtrend for the DAX, but we don't have the uptrend. We don't have the uptrend because the uptrend needs to have a higher trough followed by a higher peak. No worries. Okay, very good, Sinesa. I'll take a look at that. But the idea here is, yes, we've got a very strong impulse. Any sort of pullback now, and especially if it's some sort of shallow pullback, I think then there is some bullishness. I think the portfolio managers are starting to look for those bargains, and we've already seen the Nasdaq on this chart here. Yeah, we've already seen this Nasdaq here. Let's actually go and take a look at the Nasdaq on market scope. So let me bring this up again. Let's go through to Nasdaq. Now, Nasdaq's a very good chart to be looking at this particular time, because there is a distinct sensitivity in growth stocks or growth indexes, and the Nasdaq is a growth index. It's a very sensitive to interest rate movements. So if we've seen now the 75 basis points behind us, and if we're going into that slowdown, and ultimately if we're going into a slowdown, that means we're increasing at a decreasing rate. So eventually we hit terminal rate, then that's the turning point in the parabola, and we start coming down. But that would be, I think by that stage we would already see the markets starting to show bids. So we want to watch quite carefully. Now take a look here. So 1, 2, 2, 3. Now this is only on no, this is the weekly chart. I think it's 1, 2, 2, 3. This is actually showing uptrend. Okay, your Nasdaq showing uptrend. All of a sudden we had this terrible bear market, and now that this CPI median, the median CPI has shown some sort of apex. In fact, we haven't really looked at that. I'll bring it up just to show you what I mean, that showing some sort of apex. Well, the tech-heavy Nasdaq, which is effectively a growth, okay, you've got trough, peak, okay, you've got your higher trough, followed by higher peak, right? So there we go. Now let's go back to this chart here, and let us bring in the median CPI as well. Let's do it on this chart. I'm going to have to go monthly here because it's a monthly. But take a look here. So it's very, very clear that the median was not showing any signs of moderation. All of a sudden, here's that moderation. And this is going to make the world of difference. Now, if this hinges, if we've hit the turning point here, then that's really, I think, a turning point. So the risk markets are starting to be very, very interesting as long as we see the median CPI starting this rollover. Another thing we can take a look at, just by the way, is let's take a look at the inverted yield curve. Okay, so if we go here, US, is it 10 twos? I think that's the way it is. Let's just take a look. Yeah, that is the way it is. Well, that's interesting. So the yield curve is still showing very heavy signs of, that's in the monthly. Let's just go through to the daily. All right, so let's just keep an eye on this yield curve as well. If the 2-year yield starts rolling over, okay, which means that US monetary policy is starting to roll over, we would need to see a steepening here. That would be very important. That the steepening of this yield curve would be a very important component to keep an eye on for us to swing bullishly. Okay, so we want to just keep an eye on that as well. I actually thought this would be looking better than it is. The next chart that I want to look at is Nasdaq on a daily. Let's complete this on a top down. Okay, the cash market's just opening, so there's it's just hanging. Just give me a moment here, and we'll okay, let's just go through to the daily. Beg your pardon. Just give me a moment. There we go. All right. And so this is the Nasdaq again. It's in zone 1. Okay, it's in zone 1. Take a look at the stochastic. So the Nasdaq daily is in zone 1. Stochastic moving nicely up. Go through to the H1. Okay, we've got the H1 in this 80 area. This is quite involved, quite evolved, I beg your pardon. Some sort of pullback here, I think, would be something to see if we can exploit. Let's just take a look at Euro as well. All right, so the Euro here, we saw yesterday, series of higher troughs, higher peaks. All of a sudden, what was a very poor looking chart, we said, well, here's the distribution, here's the market, here's the potential accumulation, and here's the potential markup. Okay, so all of a sudden, Euro is showing signs of a value instrument, right? So a value is something that we should be paying attention to now. Let's go through to our trading view. What we're going to do here is we're going to bring up Euro US dollar here. So watch this very carefully, and we're going to add the COPOC here to see the value outlook for Euro US dollar here based on the COPOC. So let's get rid of this guy. Let's get rid of this guy. Let's get rid of this guy, and let's go through monthly. Okay. And let's throw in the COPOC here. Okay, now that's interesting. Let's put the 0 in. Let's just change this to a color that I think is all right. So this now pure COPOC analysis. We're below 0. That's trigger 1. Trigger 1 of 2 triggers, right? What's the second trigger? Well, the second trigger is it's got to turn up from under 0. Guess what? We've got that. Now, what we've done previously is we've added in a 3-month exponential moving average just to add an element of objectivity. So let's put that in. All right, and you can see we're about to cross over that 3. So the actual signal is being given for euro. It looks as if we're about to cross up here. We've seen the signal now come from the Fed. They're looking to slow down to the point that they're increasing at a decreasing rate. We've seen that the moderation in the median CPR, and we've seen the dollar react quite viciously to the downside. Well, if the dollar is reacting viciously to the downside, then all the currencies that have been hammered, well, they are technically speaking, value instruments. And you can see the COPOC here flashing the signal, and we can just wait until the 1st of December and double check to see if we've actually crossed above, because it would be a monthly signal here for us to double check. So there is definite evolution. Okay, the markets have evolved, and we want to see if we can really confirm potential bottoms here, not get caught in any bear market traps, but I think there is a distinct paradigm shift in terms of the yield charts, and I think that makes a world of difference. Not only are we seeing that paradigm shift in the yield charts, but COPOC on the euro is giving a qualitative signal as well. So we want to watch this very, very carefully indeed. All right, with that said and done, there is going to be a live trade for the non-farm payroll. I'm not sure we're going to get an email out because it's December. The staff may be thin there. I'll just double check with the email marketing team today. But if there's no emails out, we will have sort of a more personable, type of live trade there. All right, if there's any questions, please go ahead and type this. Or any questions, go ahead, type those in. All right. I think let's wrap up here. I'll get this onto the Telegram channel. Thank you very much, guys. And have a good day, and we shall speak tomorrow. Cheers.